Hi, and welcome to the Luxembourg PE&VC Stories. Today's guest will be Pascal Bouvier, Managing Partner and Co-founder of MGV. Hi, Pascal.
Hello, and hello everyone. Thank you for having me. Thank you for having me.
Great pleasure. So, let's get started. What can you tell us about MGV? And first of all, what does that mean? Secondly, how, when, and who started this adventure?
Goodness. All right. So MGV stands for MiddleGame Ventures. We are a venture capital fund that invests in early stage startups in the fintech, financial technology vertical. So everything that has to do with financial services, lending, capital markets, asset management, insurance, and payments, roughly the 5 ecosystems that comprise the industry. We look at new technologies that will be digested by the industry either fairly soon or at a midterm horizon or at a long-term horizon, depending on whether it is evolutionary or revolutionary. Where does the word come from? So I thought that I was a good chess player a long time ago. Now I'm a mediocre chess player. And in chess you have like the beginning, you have the ending game, and then you have the middle game. And so that's where MiddleGame Ventures come from, because in the middle game, things starts to get more complex. And that's where you have to apply more analysis and thought to whatever you do.
Yes, that really makes sense. Quite smart. You just explained a little bit the verticals. Could you also give us more details concerning the investments you're executing and how do you source your deals?
All right. So first of all, we have our first fund, which was incorporated and closed and operational in January 2020. So we've been investing for the entire year 2020, the entire year 21, and we're still continuing to invest in 22. We made 7 investments in 2020, 5 investments in 21, and we're about to announce our first 3 investments in 22. So we've been busy, right? Where do we look at more particularly in the financial services industry, as well as in foundational technologies, as well as thematics? Well, first of all, we pay a tremendous amount of attention to data. Anything relating to data and how one is going to use data in a smarter way and in a more automated way. When it comes to analyzing, sharing, monetizing, protecting, and using that data from a governance standpoint. Within an industry that is heavily regulated with legislation that is somewhat different than other industries, and data being all important to kind of like winning any type of like commercial endeavor, we do pay a lot of attention to data and how data is being used. Which means startups that allow incumbents, banks, insurance companies, capital markets actors, and so on and so forth, asset managers, in being smarter in the way that they deliver products, in the way that they think about new products going forward, and in the way that they go to market with various clients. That's one thing, the data piece. Second, there's been several waves of fintech innovation already over the past 13, 14 years. The first waves were around direct-to-consumer, were around payments, a lot of things that were low-hanging fruit in terms of like renovating in the industry. Now we think, and it's borne by what we see, in the industry, that we are going after innovating and disrupting other more complex value propositions around capital markets and asset management, which includes institutional asset management, wealth management, retail wealth management, and so on and so forth. So we pay a particular attention to an asset, how an asset is issued, what happens before the asset gets issued, pre-issuance, at issuance, post-issuance. Once an asset is issued post-issuance, how you service that asset, how you trade with that asset. I'm getting back to my first thesis around data, the type of data that you need to gather in order to understand an asset, whether you sell it or you buy it. We pay a lot of attention to that and the future of capital markets and asset management. Less so in retail businesses, startups that are direct to consumer, more so in startups in the fintech ecosystem that produce a B2B or a B2B2C business model that will eventually sell to incumbents in the industry that want to survive the digitization revolution, so to speak.
And so you have been very busy. How do you spot those target companies?
Oh, that's an excellent question. So remember that with my co-founding partner, a third partner, we have been doing exactly that, investing in early stage startups in fintech for like the better part of the last 13 years. From the very, very beginning of like financial technology innovation, which was christened the fintech, right? So we're well known. We have a great network on both sides of the Atlantic, in the US and in Europe, even though we invest predominantly in Europe and the European Union. But we're a known entity. We've done this for many, many years, which means that incumbents, peer investors, whether they're specialized in fintech or whether they're generalist funds that happen to have one vertical, which is fintech, service providers, entrepreneurs themselves, whether they're like thinking about their next endeavor or they have already their own startup that they're working on, law firms, everyone knows us and know what we're interested in because we publish it and we're not shy to tell the market what interests us. So, you know, from that perspective, we receive a lot of inbound, right? And then we have we do a tremendous amount of work around research on the various theses and thematics that I've expanded upon, which are, you know, the data piece and like the future of assets. That allows us to understand what activity there is in these markets. That gets us to build screens of startups, usually earlier than when they're ready for us to engage and to start working with them and potentially partner and invest. And we do that, you know, week in, week out, which means that in our CRM, we have probably around 1,000 startups that we follow. That's a list that is fairly fungible. It comes from like introductions that come into us. It comes from our screens and our reach out. And out of the 1,000 startups, there's probably 100 to 150 that we pay more attention to. Out of the 100 to 150, there's around 20 that we pay a lot of attention to. And out of those 20, we invest in sometimes one, sometimes 4 or 5, and that really depends on, you know, timing and what happens in a particular year, in a particular quarter, in a particular month. And that activity renews itself all the time. We have a team on the investment side that basically continuously looks at startups, new startups coming up, the startups that we've been tracking to refresh our pipeline and that tip of that pipeline spare, that 20 startups that we look at all the time, so as to increase our signal and make sure that we don't miss any startups and we look at the ones that we should be looking at. Now, having said that, venture investing is you know, part art, part science. However, or how much endeavor that we put in to make it more science, there'll always be, you know, the art. And that comes with like speaking with entrepreneurs, speaking with like everyone within the ecosystem, service providers, other investors, and so on and so forth, to kind of like get a feel for the people that we have in front of us after we've done all of our, you know, qualitative and quantitative research and so on and so forth. And that's kind of like the art part that can never be eliminated.
So a real gold mine to be nurtured. And within this constellation of investments, any specific deal you would like to highlight now?
We have invested in one Luxembourgish startup called Nextgate Tech. And they fit a perfect mold for us, which is they're applying smart computational techniques to data sets that allow a particular actor or different types of actors that provide services to funds that are publicly traded, you know, a better way to validate and calculate net asset value. And that's a fairly important nut to crack in that industry, in the asset management industry, as well as asset management servicing industry. that doesn't seem to or doesn't appear to be, a sexy thing. It's not like a quote-unquote neobank or a peer-to-peer payment business or even a crypto business, but it's foundational for capital markets and asset management. And being able to reduce the time that it takes to validate NAV in that industry with much less errors, right, in a way that satisfies an auditor, that satisfies a fund services provider, that satisfies a ManCo, that satisfies a general partner, that satisfies the limited partners of that fund, the people that have invested in that fund. That's kind of like a holy grail. So that's one example amongst others where we're quite excited to have invested in that company.
Looked like really a very instrumental example, because Luxembourg, as the second biggest, let's say, fund center in the world, is surely interested by NAV calculation and also to have, let's say, the best-in-class tools. Do you handle UCITS and also alternative investment funds with that kind of startup?
For now, UCITS, publicly traded funds, they're looking at expanding, but I'm not managing, I'm just investing. So I trust the CEO and his team to grow the business in the best way possible.
You also explained just a few of the details of MGV, how you are operating. So you have a Luxembourg fund. Do you have other offices? Which markets are you looking at? And a little bit, which kind of profiles do you need within MGV?
Yes. So I'll first discuss MGV as a structure and then the team and how we're going to grow going forward, right? So first and foremost, we chose Luxembourg for our platform, MiddleGame Ventures. And our vision is really to grow that platform into the premier fintech investor in the world, right? Second, we have our first fund, MiddleGame Ventures Fund 1, right, that invests in the EU and invests in Series A startups, so just before Series A, at Series A, or up to Series B, right? So that's the first fund of that family of fund. Our vision is to have several families. We're putting the finishing touches on a small seed fund that will be the first fund of our family of seed funds. And then in a couple of years or so, I want us to have a scale-up fund that will invest in very, very mature startups. So that vision, if realized, will mean that in 3.5 years, we'll have 3 to 4 funds from these different families of funds that are operational and investing simultaneously, right? So quite an expensive with an A strategy. Now, the main office here is here in Luxembourg, right? And I'm a Luxembourg resident as of 2 years ago for those purposes and enacting that vision that I just mentioned. And as far as the team itself, right? I have 2 members that are part of the investment team. One of them shuttles back between London and Luxembourg. I have 2 partners. I have a partner that lives in the US and a partner that lives in Dublin to have a complete coverage between Europe and the US. I have a head of operations, but more importantly, the next 2 or 3 persons that are going to join us are going to be based out of Luxembourg to help me grow that platform that I mentioned with the families of funds and so on and so forth.
That's also, again, a true success story. That's exactly what we like to hear, that people are, let's say, raising great capital out of Luxembourg and building a strong team also in Luxembourg, taking the decisions in Luxembourg and including also some front office tasks.
That's very much us, for sure, yes. And there's quite a lot of work to be done, not only in terms of like building the operations of the business, but also building a strong investment team. And for that investment team that covers most of Europe, I think that Luxembourg is one of the better places to do that of.
Do you have an ESG strategy, and how important is that for you?
We started this year, for sure, and that's quite important. I get lost in the various types of articles that you have to elect off of SFDR and so on and so forth. For a venture firm that invests in businesses and startups that are 100% digital and that provide digital solutions, arguably the E is easier than an investor that invests in different types of physical projects. Be that as it may, we have a very specific policy on E that we internalize and where we look at the startups that fit that, on S and on G2. S being the social aspect, the sustainability aspect, and G being the governance aspect. And first, governance is actually fairly important because there are different types of technologies that are being put to bear and being experimented with in the DeFi space, in the blockchain space, and that will eventually find themselves in financial services, specifically in assets, for example. So one data point, a set of data points, a physical asset or a financial asset, a share, and so on and so forth. And the type of governance that is being innovated and tinkered with, right, shows the way for how things are going to be organized in different ways for corporations, with more transparency, which is very important for investors, very important for auditors, very important for regulators in the financial services industry. So we pay a lot of attention to the governance aspect, and we screen and have started screening startups for the entire part of 2021 with these things in mind. We actually have added a ESG component to our due diligence. We actually track our portfolio companies with certain ESG KPIs, which we will continue to report on going forward to our LPs. So you would have asked me that same question 2 or 3 years ago. I would have looked at you quizzically, but now it's a fact of life and something that we have definitely internalized for ourselves as well as for the startups that we invest in.
So Pascal, you have your fund in Luxembourg. So how do you see currently the Luxembourg ecosystem and infrastructure? Anything we should or could change in the future?
So I'm going to answer this first and foremost through my experience when I came here and we opened all the entities that form, our platform and our first fund. It's super easy to incorporate. I think that's like a big plus and a big asset for the ecosystem and for Luxembourg in and of itself. Because from a startup perspective, you come here and you're in business fairly fast, as opposed to other geographies and other jurisdictions. At the margin, it's always important, right? If you're better and faster by 1 day or 1 week or 1 month, it's always very good. That definitely was our experience. And from the anecdotal views that I have, like speaking with various startups at the Luxembourg House of Financial Technology or with other organizations and at events, it seems to be like a recurring view. Wow, it's super easy to do business here. Now, not everything is rosy. I'd love for startups or for funds like ourselves to be able to open a bank account a little faster than what is happening right now. And so that means that there is some collaborative work that may need to happen between, the various groups that are part and parcel of how can a bank account be open fairly easily. That means thinking about AML and KYC from that perspective. That means thinking about any type of information that you have to gather from ultimate beneficiary owners. That means kind of like reusing all these pieces of identity so that an entity and the various owners that have built that entity that want to create a bank account do it a little easier. If that were to happen, like I think the Luxembourg ecosystem would be even more competitive than what it is right now. And then another way to answer this is to answer it from what I know, which is financial technology and fintech. I can't talk about other segments of the industry where there is innovation because I don't know as much about these other segments. But from a fintech perspective, right, you have very strong, high expertise and deep expertise in fund services, right, in the asset management industry and in capital markets from an indirect perspective. I said earlier that we invested already in one startup, Nextgate Tech, that is in that industry, in a particular value chain. I'd love to be able to look at like other Luxembourg startups in that chain. We're actually tracking a couple, but rather than have a couple, I'd love to have like 20 in fund services and wealth tech and asset management tech or whatever the acronym is, right? And so that implies thinking through ways to spur that innovation and make sure that you have like the second, the third, the fourth, the fifth next gate that comes in here and like starts doing business. I think that you have the client, right? There's a lot of very large fund services businesses out there. I think that you have the infrastructure, whether it's like telecommunications, internet, public transport, the transportation system at large. You have the decision makers that are here, you know, most of the large fund services businesses. So it takes maybe one or two additional sparks, one or two startups that make it big, and in turn, give back to the ecosystem. And some of the key employees from these one or two big startups that kind of like, start their own startups. That's as easy as that. And we're actively, with our fund, with MGV, looking at that, that second, that third, that fourth startup that we want to invest in Luxembourg, in the financial services realm. I'd love to have a little more dialogue with all the incumbents here in Luxembourg to kind of understand their needs better, their pain points better, so that when we look at startups that we're interested in, business models that we are interested in, we can signal to the ecosystem here in Luxembourg, well, this one thing is missing, or that one thing is missing. That incumbent told us that it was a pain point. And then let's try and if we can figure out a way to catalyze a team, a management team, an executive team, a founding team that will address that particular issue. I think that all the pieces are there. It's just a matter of like, the right time and the right tempo to make that happen. But again, I'm only talking about financial services and fintech. I don't think that I'm qualified to talk about like other aspects of innovation in Luxembourg.
And concerning the fintechs, that's a very inspired and ambitious vision also. That's very good. Concerning the bank accounts, rest assured we are in close contact with our sister associations from the banking industry, funds industry, alternative fund administrators, and there we are really looking for solutions. So that should also then be something to be handled very soon.
Good to know.
Now on a more personal basis, what did you study, Pascal? And how did you become a venture capitalist?
First of all, I was a really poor student, so I can't say that I studied anything because, it took me quite a long time to figure out that I had to apply myself at university. So I can't draw off of I studied this and it made me a great venture capital investor. I want to remain humble. Second, it's very easy in hindsight to say, Stefan, obviously, I did this, this, and this. I actually started in banking, learning how to lend and learning how to invest. And then after that, I got into startups and operating. And I operated a variety of startups and small-sized businesses, anywhere from 0 in revenue to 30, 40 million in euros and 30 to 40% growth rate. Anywhere from 1 or 2 employees to 300, 400. In a CFO, CEO, COO, head of sales capacity. And that got me to understand exactly how you grow a business, the type of issues that you face when you hire a team, when you grow a team, when you incent a team to execute and perform. I did my own startups. I did other people's startups. And then in the third part of my career, I got into investing, not for a bank, but for a large family office. And I married, both of these and mixed and mashed both of these experiences. The investing and financial analysis and lending and looking at balance sheets and looking at competitive strategy and so on and so forth aspect. And then the operating aspects of, what happens when you build a company into investing in early stage startups. I could tell you that was a 20 to 25 year plan in the making, and I knew exactly how things happen, but actually I would be lying. In hindsight, it's very easy to go that was absolutely natural, and I think it happened, by happenstance, and sometimes by accident, even though it happened in a normal way that allowed me to be good at what I'm doing right now. Which leads me to a question that You probably may ask me, so I'm going to answer it before you ask me, right? What does it take to be a good VC investor, right? So there's obviously the analytical aspect, trying to figure out the financials. There's obviously other types of analytical aspects that include understanding technologies, understanding how technologies are deployed over time, the various stages of innovation, understanding competitive advantage, understanding how a business goes about going to market. All of these are very specific and deterministic traits, right? You can look at them in the books. You can work with people that have already done so and learn by osmosis. And that requires, having a brain that is functioning at a fairly high level, again, from an analytical point of view. But then there's the other aspect. And the other aspect is as important and sometimes more important when you invest in early stage startups, because you're dealing with human beings, right? When I look at an early stage startup, I first look at the market. For me, the market is very important. Then I look at the team, and then I look at the product, right? And that team, right, I better not make a mistake. When I have Stéphane Pech in front of me who says, Pascal, this is my startup, it's fantastic, I want you to invest in it, I'm going to have to first and foremost really understand who Stéphane Pech is, right? Is he the right person? Does he have the right experience? Has he done this before? If he hasn't done this before, does he have the right traits to be a great entrepreneur? And that is, a real psychological work that happens to kind of decipher the person that I have in front of me. Once I invest, I partner with the team, with the CEO, with the founding team, and with the startup for probably 7-8 years if everything goes well. And I hope that everything will go well. So we better have a marriage that works well from the very beginning. There better has to be a fit. And it can't be only one directional, i.e. I believe that, I like you. It better be that you, Stéphane Pech, the entrepreneur, likes me, Pascal Bouvier, the VC investor. So that work, that aspect of the work to kind of figure out, how to be a good venture investor requires understanding human beings, requires understanding dynamics between human beings and how a team, performs at the highest level. And I think that either you have it inside of you and your life experiences kind of get you to be better and better at deciphering people, or you just don't have it. No matter what amount of work that you do in terms of hitting the books and psychology books and so on and so forth, it's going to be very, very difficult for you to kind of get that particular aspect. Much like a salesperson, right, needs to understand psychology, needs to understand human beings, their triggers in order to be a good salesperson, and it's very difficult to learn that if you don't have it inside of you. On the venture side, you need to have at the very beginning that nucleus of being curious about things, but be also curious about people. And you being curious about people gets you to kind of discover people, discover who they are, enjoy them, enjoy discovering them. And that gets you ultimately to be a good VC investor.
Great lessons and insights. Thank you, Pascal. So I will work tonight on my presentation and send you then my updated pitch deck tomorrow.
Please do.
Which kind of piece of advice would you like to share with young talents interested by VC? You highlighted curiosity, hard work, analytical spirits, but any other specific skills you would like to underline?
Yes, we have a lot of young people that start in their business life that come to us, send an email, reach out to us in social media and say, I'm interested in joining the venture world. You have a position for me, and so on and so forth. I see a lot of profiles that are business or financial driven in nature, right? They come from an environment where they may have gone through a business school, whether undergrad or graduate. They have taken business skills. They've worked in the business world. They may have done financial analysis as a financial analyst. So they have that square, down, and it's something that I don't question. What I love to see are two other things. One, that they have looked at a particular technology, a particular business model that you won't get into, by looking at accounting books or financial statements, analysis books, and so on and so forth, right? and that they've become at their level with the years of experience that they have, which might be 1, 2, 3, limited, but at their level, experts in one particular thing, right? It's always extremely healthy to hire someone that comes into your venture fund that has that eclecticism and, with the business degree, is able to get molded into different things, right? But it's also extremely important, extremely interesting to have like a young person coming into to the venture fund that brings in something unique. I know everything that there is to know about this particular type of payments, SEPA in the EU, for example. I know everything that there is to know about protecting data and cybersecurity attacks. I know everything that there is to know around blockchain technology. I'm digressing here, but you get the point. That gets me what? That gets me a good signal on that person that I have in front of me is indeed interested and curious and open-minded, right? But more importantly, they have gone the step to identify a particular technology, a particular trend, off of which they know that the venture fund that they're applying to is, investing in, and that there is like some type of fit to be had. If it's someone that comes with like, general business background, but like not that one specific thing, not that one thing, then it becomes a little more difficult of a sell. So that's one way of entering. Another way is, and I always give that advice, right? If you can, if you have the resources, go and work with a startup, right? Do that for 6 months, do that for a year. Try to figure out exactly the craziness that happens in a young startup. Whatever it takes to achieve day in, day out, and to operate and to execute. Be in the trenches. That's also another thing when I look at people that come to us and say, we'd love to work with you. If that person has worked with a startup, if there's real meaningful experience, and I'm not looking for like a fantastic exit or a financial return or whatever. I'm looking for someone that has worked with a startup and really understands the craziness of day-to-day activity. Why? Because that person is going to be able to ferret out the right startups, the right entrepreneurs through their own experience. There's no substitute, right? So again, business and financial experience, okay, that's kind of like table stakes. Showing me that you've looked at very deep, very deeply in-depth a particular technology or a particular business model or a particular trend in the industry, that's a major plus. Having experience with a startup, if you're able to do so, because usually either it doesn't pay or it doesn't pay a lot. So that's why I'm saying, if you're able to swing it and get resources, that's also very, very good. And I'll look at that favorably.
Absolutely fantastic hints, and as you just said, that was already applied in the past in the industry, where the engineers also went to work in the factories, in the chains, to really understand what's being done, and also then took some lessons afterwards in order to integrate that in the processes or management potentially. Very interesting. Any leader or specific person who inspired you during your life and or career?
Oh goodness, I think my first boss with a French bank that will remain unnamed, taught me a lot of valuable lessons on how you look at a company, how you look and how to lend to a business, how you develop relations with those that you service as a bank. That was like old school banking. Not that it's that I want to date myself, but it was definitely old school banking. Again, it's kind of like the same red line here, like people and people management and understanding people is very important. And even though it was like lending to corporations, that aspect, I learned a lot, most definitely. And then my second boss was with a Japanese bank that will remain unnamed too. And it was the subsidiary of a Japanese bank in Paris. So half of the staff in that Paris office was Japanese, and the other half was French. And we're looking at projects all across continental Europe. And we had to write up our investment memos and do all of our due diligence either in French or in English, write it up in English, send it to the Japanese office after having it been signed and approved by the managers in the office in Paris that were Japanese. So that was like a hodgepodge of like different types of cultures with different types of projects. And that really opened my mind. Actually, that would be like another, I mentioned the various things looking at a particular technology or working with the startup as being important. But now that I think about it, that second job experience that I had with that Japanese bank, right, in a multicultural environment where you look at all kinds of different things, early in your career, there's no substitute because it really boosts you with your knowledge and your knowledge base and your toolkit to kind of like take on all kinds of other things that are more complex at a later stage. Yeah, but that was, thank you for the question because I hadn't thought of that in like many, many years.
You're a very international and open-minded person. Any specific books, music, podcasts, series you would like to share with our audience? What are you reading at night?
I am reading way too many things, so I'm not sure that I can hone on like one particular piece of advice. Part of the work of being a venture investor is to really, spend an inordinate amount of time reading white papers, research papers, blogs, social media, and various books, not necessarily about business, innovation, or venture, but like, in all walks of life and all kinds of different industries, because you want to be good at like doing pattern recognition. So, memory does not serve me well now, so I won't be able to give you the names, but there is a newsletter that I assiduously read on a daily basis about the history of music and what is happening in music. I have the same in arts and plastic arts and literature. I have a newsletter on like geopolitical events. I have a newsletter on competitive strategy in like completely different industries than the financial services industry. You get the gist, right? I look at all kinds of different things that are going to strengthen my understanding of what happens in the financial services industry. So rather than say, this is the particular book or that is the particular book, I would say try to read and listen to things that are sometimes completely different than what you're doing because it's going to help you. Having said that, there is a particular strand of books that I recommend. Books that will explain to you competitive strategy within the realm of platforms and marketplaces. These are quite important to understand the digital industries that we're in, and I would hotly recommend those from that perspective. Second recommendation, it's particular to financial services and fintech. If you're interested in that space, grab any book that explains payments. Payments is the easiest thing one would think to understand. Actually, it is deceptively simple. It's actually extremely complex. And once you understand payments, retail payments, business payments, push, pull payments, there's like a variety of payments. Go on, Amazon, go on like any other online marketplace where you can buy business books, go to a specialized bookstore and ask for a list of payment books that they have. That will be money well spent and time well spent in reading these books, because once you understand payments, you understand the entire financial services industry.
And when Pascal Bouvier is relaxing, what is he then doing?
I play chess online. I used to be good at chess, but now I'm quite mediocre, as I mentioned at the beginning of this interview. And then I cook at home. And then I taste Burgundy wines because my family comes from Burgundy.
Fabulous. Thanks a lot again for sharing so many insights, for this genuine interview, for opening up. That was fantastic, and hope to see you very soon again.
Well, thank you very much for having me, and thank you everyone for having me. I hope that you will enjoy this.